I personally name this thing CIA, right? Not the government CIA, the mortgage CIA, right? And what that consists of is credit, income, and assets. So Mike, let's get into it. What are some of the questions that a client asks you as it relates to credit? Once we pull credit and they may see, a difference in their credit versus maybe a monitoring system that they're reviewing.
Well, a lot of first-time home buyers think that they have to have perfect credit to purchase a home, and that is a huge myth to homeownership. Just because you have a low score doesn't mean that we can't, one, improve that score, but most importantly, it means that doesn't mean that we can't work with you at all. At Southpoint Financial Services, we work with home buyers with credit scores as low as 580. If you're anything lower than that, reaching out to a loan officer like myself or another great loan officer with this company, we'll be able to review what's making up your credit score and kind of give you a game plan on what you can do to change it. Before you're getting into home ownership, most people who even may not even be thinking of home ownership have access to many resources where they can monitor their credit. It's a big what if. Unfortunately, it's nothing that we're taught in school, at least when I was in school back in the day.
Right.
I didn't know what credit was. When I got out of school, I jacked my credit up. I didn't know what it meant, how important it will be, or excuse me, how important it would be. So I spent years rebuilding and repairing my credit. Now, when you're looking at these credit monitoring services such as Credit Karma or the free applications you get with like your Discover or your Capital One card, you may be seeing low scores, you may be seeing high scores, and then when you reach out to a mortgage loan officer to get pre-approved, they may tell you a completely different credit score than what you pulled from your Credit Karma. The reason being is in the mortgage industry, we're using a mortgage FICO model. Every financial industry has a different credit scoring model. There are there are three credit reporting agencies: Experian, TransUnion, and Equifax. And when we're looking at getting you pre-approved for a mortgage, we're looking at the middle of those three scores. So if one of those scores is a 600, you have another that's a 650, and another that's a 700. Even though you have a low score of 6 and a high score of 7, your qualifying score is going to be that 650, which is the middle of the three. And back to it being different than your Credit Karma or the consumer models, those consumer models don't take into accountability the way that the mortgage models do, such as your payment history, the type of accounts that you have, the length that those accounts have been established, and most importantly, what your balances are on those accounts. What can high balances do to scores, Angelica?
Tank it.
Absolutely.
um, yeah, the best way for me to put that would be, you want to show you want to show that you have credit, but you technically don't need it. That's the best way for me to put it.
Yep.
They just want to see that you don't have, you may have a credit limit of $500. They don't want to see that credit card maxed out,
Correct.
right? They want it. The myth is that they say keep it under 30%. I preferably like to say keep it under 10%.
Absolutely.
Right? Would
Absolutely.
you agree with that?
Yeah, absolutely. And we have tools at Southpoint. It's called a what if simulator, where if you do have higher balances on your credit cards, or maybe no balances at all, and you might have an expense coming up throughout the mortgage process, we can simulate what either paying down or adding additional balances to those cards could do to your scores. It's a great resource that we have access to. I've helped many clients out changing their scores and giving them a game plan to pay down some accounts. And like she was saying, you don't want to use the credit that's available. It's there if you need it in the event of an emergency, but the best way to borrow money is to show people that you don't need it. Now, I know the majority of people need a mortgage because I don't have $300,000 laying around to pay cash for a house. So I do need a mortgage, but I don't need to use 50% of my credit limit.
Right.
Some people do, some people don't, but if you don't need it, folks, don't use it because it's just hurting your score and it's impacting your ability to purchase a home and achieve the dream of home ownership.